more constructive now, including there's signs that Japanese tech equities might be in a better place than they were. So there will be some pain for Japanese equities because of the yen rebounding. But they might just have to look past that in the short term.
Let's talk about the liveliness of the BOJ today. Would it really be maximum impact if they came through with some shock and awe?
They brought Garfield out.
Yeah, this would be the time. Yeah, the dollar is having plenty of difficulties. Higher oil prices aren't helping it. The second day look at the Fed has left people more convinced that this represents, from Walsh's point of view, a significant shift away from, they're not sure, nobody's sure if he's a dove. They certainly don't see him as being a hawk. And in that space, when you look at what's going on around the world, that makes the dollar vulnerable. So now is the time to strike again and strike hard if you're Japan, and if you get it from both sides. You've had the MOF coming in with intervention. If now you get the BOJ, like I said, at the very least, talking a good hawkish game, talking about rapid rate hikes, then you can sustainably move the yen away from that 160 level, which has been a major pain point. You can start to try and change the narrative on a sustained basis.
Bloomberg's Garfield Reynolds, who leads our MLive Asia coverage. Very, very busy day for the team, and subscribers can turn to the terminal for more on that Bank of Japan decision today. TLIV Go is your function for the latest updates, our commentary from our team of expert editors.
What up, y'all? It's the KRISTOPHER. It's the KW podcast. KW speaking. I don't know if y'all can see me there. Maybe better with the light on. How about this guy here? Kind of an improvement. Got shit hanging everywhere. Who cares? Anyways, if you're new here, this is the KW podcast. I provide due diligence on the markets, capital markets, commentary, trade signals, and so picking up from where we left off yesterday. And every single trade recommendation did well except for the Australian dollar Japanese yen, because just as I warned, the Bank of Japan came in and intervened, and it was the biggest drop in like 2 years. But all my other recommendations went up. TQQQ, TNA, MISTR, BABA, BABA was up big time. My clients did great on that trade. But I got torched on the Aussie yen trade. But I hopped back in on it because the fundamentals haven't changed. And so now that that's out of the way, now the only thing is, are they going to do more? That's the question. I'm like, oh, shoot, that was already 2 years worth. I mean, but Garfield he's the man. He says that if they're going to do something, this is the time to do it. So getting back in on that Aussie yen trade is especially precarious since it took such a nasty hit. I mean, I was up like 100% gain year to date. Now I'm about break even. Like literally, like about half of I took about 50% hit on that trade. But that's what a good trader will admit when they make a wrong trade. And I even said it yesterday. I said, watch out for the Bank of Japan. I should have followed my own advice. And I was watching it like a hawk, honestly. I fell asleep. I'm not making excuses or anything, but that's what happened. That's what I'm saying. Normally I wouldn't hold trades overnight, especially large positions over the weekend, so on and so forth, especially when Bank of Japan intervention is so close to coming. But that's why you diversify your holdings. Diversification. You don't just put all of it inside Forex, put some of it in the ETFs, and the US ETFs, the TQQQ or CWEB, the Japanese index. When you buy an index, you don't have individual stock risk. You got the index. Now you can lose just as much as you gain, of course. Past doesn't guarantee future performance, but a good trader doesn't have all their eggs in one basket. They know how to trade a bunch of different, currency instruments. So the instrument you want, Aussie yen is a great indicator. Also, we use that as an indicator, not always just actual trade. Um, so you want to allocate overall. Um, the is presuming that you have saved enough money for your emergency cash reserve, and you're making all your contributions, your matches, your 401k, paying your insurances, and so on and so forth. Your discretionary cash should be used towards speculative trading in forex. But in your retirement accounts, you can hold on to the long term some of these index trades I'm recommending, especially if you have a Roth IRA, because those gains grow cash tax free, which is a nice thing. Um, so consult your tax advisor. We're not tax advisors here, of course, but anyways, let's get back to the Bloomberg program, see what they're saying. But yeah, intervention totally got hit. I mean, I called the intervention. I just I should have gotten out. But hindsight's always 2020, y'all. But you don't worry about losses, because when you know what you're doing, you can get it back. It's the ones who don't know what they're doing who worry about the losses so much, because you're gonna have losses. A fisherman, even the most experienced fisherman, is not going to catch fish every single day. Or they might go out and they might damage their boat. I came back, my boat was barely floating, but I mean, still, I lived to fight another day, and that's what matters, y'all. Stay humble. Now let's go on to the Bloomberg.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on Salar de Uyuni in Bolivia, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
She's a good reporter.
Puts the spotlight on a different aspect of global finance. Flows, funds, and the...
Oh my God, it's a gajillion commercials. Let's go look at the chart on the Aussie yen. Okay, this is a daily chart, y'all. As you can see, it just took a beating. Whap! But it's still within that. Yeah, I got a lot of drawings here. But it's still within that cup handle range. A little bit low here, but the cup comes down to here. Here's the handle right here. I made the range here, but now we're going to change the range to here. So here's the cup handle. Cup handle, it's got a big handle, comes down. Still, the theory, the overall theory behind all this is that fundamentally it's going to break to the upside, and that hasn't changed. But the theory is tipsy right now with the whole war situation with Iran continuing on. That means oil prices and inflation is going to continue to be under pressure. So on the other side of the coin, we got all that stimulus from the big, beautiful bill still sloshing around. Let's not forget about that, y'all. I mean, there's like a lot, almost $1 trillion there. And then you had $19 trillion of foreign direct investment pledged by multiple countries as part of the trade deals Trump has negotiated. That hasn't even come to fruition yet. That's a huge $19 trillion coming into our country. Then it gets taxed. Say the tax rate average is 15%. So, and say it turns over, when money comes in, people buy goods and services. That then pays their employees, who then buy their own goods and services, and then so it has a velocity. cash has velocity to it, gets taxed again and again and again. 19 trillion comes in, say average tax rate is 15%. It will just 15% on 19 trillion over and over and over and over and over again. You know how much that adds up to? That balances the budget, y'all. Trump balanced the budget in accrual counting already. Why is the mainstream media not saying that? Hey, Trump already got pledged $19 trillion foreign direct investment, which accounts to something like over $1 trillion in tax revenue that balances the budget, because the budget deficit is about $1 trillion. That's just some foreign direct investment alone. That doesn't account for all the fraud that we've uncovered, almost $1 trillion, and so that the fraud alone balanced the budget. So now he's got 2 times the balanced budget. Are you freaking kidding me? Why are y'all not talking about this? Bloomberg, if you're watching, shame. You are a financial institution. That is critical information you're omitting. Oh, I mean, all the OGs like me know it anyways, but, I hope Bloomberg has a succession plan that's positive, because you got to get the owner built a great platform, but he's ruining it with his political bias. I hope it reverts. He's got to be in his 80s by now. I hope it reverts to someone with more sense. Anyways, I digress. Back to the Bloom. I call it Gloomberg because they're always gloom and doom on Trump. But they get everything else right. I give them that. The fact that they have the largest scope in the world when it comes to scope. They have over 300 journalists in 2,000 countries, or some crazy metric like that. That's, of course, if it will actually play. Futures are nice and green, though. Look at that. It's just that, here, take a look at the yen. Get a 5-day chart here. Look at that drop. Blah, blah. Let's look at it over a year. Over a year, it's not so bad. Here's the last time they intervened. They said it was the biggest drop in 2 years, but I'm looking at 1 year here, and that looks pretty close to this drop, this drop, this drop. Well, those are all times when they intervened. But, they probably spent almost $100 billion just to make it go down that much. What a waste of money. I mean, you're just throwing good money at bad, Japan. You're wasting your talent. What the hell is going on with a damn program? Come on. Anyways, if I can't get this thing to start up right now, I'm just going to cut this one short because nothing has changed, basically. Only thing that's changed is Bank of Japan intervened. So if you're holding Australian dollar, Japanese yen, I'm sorry, guys. We took a hit on that one. But I would just buy the dip. I bought the dip myself. I just went all in on the dip because the fundamentals are still the same. You should normally not buy when something is down, okay? You cut your losses on your losers and you reallocate that to your winners, okay? That's the sunk cost fallacy. But you add to a trade, or if you get margin out like I did, you get back in when the fundamentals are still the same. You just got hit by a technicality like this one. And even the commentator, I was trying to record it, he was saying that it was bizarre, that was not expected right before the rate hike. But maybe they did that to justify the unchange. They didn't have to make because everyone's expecting that they don't make a change. It's unch, UNCH is a short term unchange. They're going to leave their rates unchanged. So they would have had to raise rates in the first time in a long time. So once the central bank breaks with the status quo and starts raising interest rates, They call it a rate hike cycle. So once the cycle starts, usually once they do that first rate hike, it's like the beginning of the cycle. So they don't want people to think it's a cycle. So instead, they intervened in the currency so they don't have to raise rates tomorrow. That's my prognosis on it. But if you get back in, Garfield, he's a baby boomer. He's old school. That guy's been around longer than I have, and that's a long time. Because I've been trading since '97. He says that they are going to do something like raise rates. This would be the time to do it because it would have the most effect. But I'm like, I think they already shot all their ammunition, Garf. But he said just to watch out, So I'm going in, but this is a demo account also. It's not real money. You know what I'm saying? But I wouldn't have held it in the first place overnight like that with the real account either. So you got to keep that in mind. It's different when you're trading with real money. Okay, y'all? So just keep that in mind. But you got to practice as if it is. Otherwise, you're not going to get the real experience from it. You got to learn to be consistent, to have integrity. You got to learn to fight your own emotions sometimes, Yeah, what the heck is up with Ultra Days? All right, whatever. I'm going to wrap this up. Thanks again for your viewership, y'all. This is the KRISTOPHER. It's KW Podcast. Be sure to like and subscribe. Never too busy for referrals. Hit that share button, and I'll see you in the next one.